we'll kind of see how this goes. Okay, thanks, Marlon. No worries. Niels, yes, the man, the myth, the legend, the one and only. So yeah, I've kind of given my intro. Now that we're kind of back on a little bit of a sort of weekly schedule, I'll be in here Tuesdays, and that's kind of the plan for a little while. And it's cool to be able to collaborate and talk through what's happening in the markets. For me, it's really a big part of why I'm here. The community that Danny and Marlon have built, and everybody, David, Manny, Niels, all of you that are participating every day over in the IM Pro room. I mean, JB and BD and T-Bone and the Pitbull himself. And, it's just trading is and can be a lonely business as far as screen trading goes. So, it's something that I think community is really important here with, getting different perspectives, but also just having some friends and support, behind what you're doing. Like, you guys over the years have seen me do some really stupid stuff, right? We all do it sometimes. And then to have, a group behind you that kind of like gives you that encouragement, hey, don't worry, shake it off, come back tomorrow. Tomorrow's a new day, Manny, new day, fresh start. I love it, right? And that's what we have to do. We have to reset every day. And frankly, you want to kind of get in that mode of resetting after every trade as well. So you hear about, Manny has like the different protocols for him, stop loss protocol. And I don't know if there's other ones he uses with like exiting profitable trades and stuff like that. But it's a very important part of what we do. And I appreciate being here and having the opportunity, and hopefully you guys feel similarly. But so let's see. So I guess on my charts, let me make sure this is streaming correctly. I just forgot to dual stream my charts. So here's my main screen. You guys can see that okay. That's my left side screen. And here are my levels sheets for today. Let's get those posted for you. Okay, so quick big thing for me is I'm not someone that typically trades the open. I don't have a great feel for it. Sometimes I do it. I make some money. I feel great. I go on and have a good day. Other times I do it, I lose money quickly in the day. It rattles me. It gets me chasing and revenge trading straight out of the gate. And I do better personally when I have a little time to just digest and see kind of how things are unfolding. I know there are times when we can do some pre-market sort of investigation, looking around, watching, reading, seeing what's going on, um, in terms of trying to get a feel for what we might see straight out of the gate. And we might have one of those today with some weakness in NQ again, after putting in a doji day yesterday, and not really being able to test the upside very strongly. So I think, looking at some pre-market charts in the Mag 7, there's a little bit of mixed action. What I sort of watch a lot is the Apple stock being bid up somewhat, Nvidia going the other way, and obviously what's been a big factor here lately are the chip sector, and like the action on Thursday, the weakness in chips and the way the market sold off. I want to see if that's going to be a theme here this morning, and if that follows through at all in the NQ, and then also kind of how that might spill over, if at all. So for me, I'm gonna sit still for a bit. I'll talk through the markets as I kind of see them, and but I won't be doing any trading for a while. I want to watch things unfold, see where I want to be biased, because I'm a short-term day trader. I trade off the 1-minute charts with the 15-minute as my sort of higher time frame, and of course I look at the other higher time frames as well. But those are my kind of time frames. So that's what you'll see here on my charts, is I have across the top here crude oil on the 15-minute, ES, NQ. These are all 15 minutes. Then I have the YM here and the RTY. And then I have the NQ and the ES on a 1-minute. And on my two other screens, I've got my CL 1-minute chart on a second screen, along with bonds and ticks. And on my third screen, I watch the Mag 7, the advanced declines, and the S&P 500 heat map. So if you have any questions about any of those, let me know. But for now, just for the stream and everything, I'll keep this main screen kind of up here. So just quick glance at it, you can see NQ, some weakness overnight, big sort of, possible cup and handle here, and potential breakdown. It's already below the low from yesterday was 683. So we're already trading below that on a doji day, or after a doji day, which also had light volume. So we're sort of a little bit in no man's land here as well. But let's see if that kind of shows us the weakness. We're seeing a little bit of mid-range action in the RTY, but maybe some weakness here on the open. And then vice versa, the crude market already's opened, trading 69.13 on the open, has already made a little bit of a move and thrust upwards. And that's kind of all I'm seeing for right now. So as soon as the market opens, I will update my charts, move these orange lines to wherever the RTH open is. And the other thing that you're seeing on my 15-minute charts are these yellow boxes, which represent the 5-day ATR value, which I watch and look at a lot in terms of just having an idea of how much room, how much movement we might be able to expect over the course of the day, and some other things which I can kind of explain as we go along. So there we go, ding ding. Trying to see if my webcam, okay, still looks okay. So yeah, just as I was sort of wondering about, we're seeing a pretty decent amount of red across the chip sector, and then the rest of the market looking kind of green so far. So some rotational stuff. It might be a good day to start trying to find a long entry in crude oil again, as we come into inventories tonight and then tomorrow, and then expiration next week. The shorts have kind of gotten away with a lot here, and to expect to get a lot more out of their short positions could be asking a lot. So we'll see how that unfolds. I personally would not be short crude, but also the ATR on the crude trade has contracted a lot to the point where, for me, I have a filter on it that right now it's not something that I'll be trading until I see that sort of, I guess, play out a little further in that. And all that is for me is just we've had such a wild situation with crude that now the ATRs are coming back into a more normal kind of looking ATR expectation for each day. But the problem for me is sometimes it contracts too much, and it's sort of like just trying to expect something to trend in a choppy market. It's a frustrating trade. So when I have that filter fire, for me personally, I take that for what it's worth, and I leave it alone and come back to it. And part of that, I was looking at the forward months on crude. It's like the next 5 or 6 months right now are trading within like 20 cents of each other. So that, to me, is an interesting scenario. I'm not quite sure, again, what to make of all that. I've been talking about if that's some kind of tell that that the consumer already adjusted, and that we might have actually, some kind of imminent recession or something coming. Maybe that's part of what crude's weakness has been. And we'll just have to see, again, how that plays out. Let's see. So we've got an opening of, I think it was 593 here on the NQ, breaking a little bit. YM 628, RTY 29.5. Good morning, Philly D. Delph Stewart, Large Void, Renee, Micah, Manny, Niels, David, D-Boy, TLB. Okay, so like first thing that that I kind of look at here, you want to know and be aware of what kind of calendar events we have for the day. Okay. Was there anything this morning that may have been of interest? We had balance of trade, exports, imports. I don't know a lot about that kind of stuff. Red Book seemed okay. Economic optimism index is next on the list, it looks like, for US data. That's at 8 o'clock my time, which is mountain time, so in 30 minutes. Then we have consumer inflation expectations and some bill auctions later, 3-year note auction, and then after the close, the first inventory number, the API on crude, and then some Bank of Japan stuff overnight, and then so not a huge amount of stuff going on today in my mind as far as planned economic data. What could move markets a little later, tomorrow, crude inventories again, you've got mortgage numbers again, used cars, wholesale inventories. Then also tomorrow is a big one, the 10-year note auction, and then the FOMC minutes. So those could be something that we're sort of waiting on in today's session. And then like on Thursday as well, we get the 30-year bond auction. The market could be very attentive to those in terms of what kind of action we get out of bonds and how that affects things here. It's the volatility in the bond market's been, again, pretty intriguing here lately, and I think that's part of what you might be seeing in the chip sector is a little bit of kind of the rejection off the pullback, right? Like we kind of broke out in the bond move, and then it came back in quite a bit, and now it's kind of moving the wrong way again with the 30-year back above 5% yield, the 10 years right at just about 4.5% again. So it's something to definitely watch if you don't watch that stuff, because if yields continue to go higher, the Fed speak and the presser that Warsh gave and his expectation of needing to really prioritize price stability, it was pretty hawkish, pretty hawkish tone there. So as we come into the expectation of what they might do at the next meeting, it's the market can start to price some of that in, and if we can't sort of sustain some support in here, especially in a thinner summertime trade kind of market, then you can see this stuff go to the offer side, like just because the buying stops and there's nobody left to support this for a little bit here. So I don't know, are we in a big range? Where does that range, what does that range look like? The answer is yes, and it depends on your time frame, and it depends on kind of your macro outlook, I think, of what, you know, how overextended did we get, if at all, or are we still kind of continuing to print Goldilocks, thread the needle kind of numbers in the economic data, like having that soft jobs number that we had that offsets things a little bit, right? So if the numbers just keep kind of balanced and going along, and the economy's like doing okay but not great, but and that's almost a perfect scenario for the market, because it's almost like easier to um, plan and you know plan your business decisions and everything if you kind of feel like things are in a pretty stable zone. Like, I mean, the inflation may be little higher than it was, but is it stable, right? So the stability was the key part that the Fed wanted to emphasize. So anyway, that's kind of a mouthful to start the day. Let's take a look at some of the chart action, and we'll see if we can find some good setups for you guys. So let's start here with the NQ 15-minute chart. Blow this up a little. So what I do with these yellow boxes is I set this for the 5-day ATR value. So in the NQ, you can look on my sheet here, and here it is right here, 708 points. So what I do is I set this box for the 708 point value, and I center it basically on the Globex session close. And I just use it as a quick visual to say, where might price go? For instance, we couldn't really get going that much in yesterday's session. And then we've kind of sold off again, and we wake up and see, weakness in the chip sector again, weakness in Nvidia. And so it's easy for me to pull this down, just use this as a visual, and just say, what if the overnight high is our high of the day? And if that's the case, and we fulfill our ATR value of 708 points, then that could give us a target on the NQ of 266.5. Okay. So that's kind of right now, that's what I'm kind of using as my theory, is that we had a doji day yesterday. We broke to the low. Oftentimes what they do on these is their stop value is above the high of the doji day, and they look for a selling day and a short sell kind of day. So we're just waiting for the close of this first 15-minute bar. If it's a big doji like this on the 15-minute candle, then that's sort of tricky as well, because maybe we reject it here, and maybe that will be our low of the day, and we'll print to the upside, which you could kind of theorize that like this. Just quickly move your box. You can see what happens. If that's our low of the day, the low of this candle we just made, we could go and print 30,200 to the upside. That would be an ATR fulfillment. And what does that do for price action? Sort of nothing. It just stays within the range. It's just an outside day where we would put in a low lower than doji low yesterday. we could put in a high above. That would be a nice bullish signal, I would say. Um, for now, again, I'm going to theorize that we might see the expansion to the downside on this, and that we might see some expansion to the upside in the crude market, which right now looks like it wants to go test the $70 level. If you're doing the same exercise on the crude chart, here's your ATR box. If we theorize that the low of the day is in the overnight session, that it's time for them to cover some of their shorts. The ATR has contracted to only $1.93. So if you fulfill that in a full value, it gets you to 70.5. Now, if something comes out or if they decide to expand the ATR again in crude, then you can see that, maybe test the high of this range, even get through and up into the 72 range. It wouldn't surprise me at all. Like the base we kind of put in here seems like a gift to me that crude is back down at these levels. There was the big technical gap that they had to fill. Not that they had to, but you could sort of see and feel that they really wanted to get price back down to that level. And so that's the question is, does it hold, or does it kind of revert back into some of that range of volatility that we saw? So taking a look at the ES, what I've been pointing out the last couple days in my room is that there have been some sort of selling pressures seen in the NQ, and what they've been doing in the ES is taking price the other way, and sort of doing a last squeeze of the buy stops, right when it seems obvious that price should be following NQ and moving to the downside. So that's something in my mind and in my brain that is of note and that you want to watch for, because I've been saying that, with crude back at these levels, that should be some kind of tailwind for the market, so it could be a very good and reasonable offset to any pressure in interest rates, and thereby, I think that's been leading to strength in the YM, strength in RTY, and if there's a little bit of a decoupling trade between NQ and ES, it's just something to watch for, because sometimes you can find these little nuances in price action where you can see one thing happen. And I like to say a lot, like, if you're making a trade because of something else you're seeing on a different chart for a different instrument, and you think that there should be some correlation, whether it's directly or inversely correlated, if the price doesn't act the way you think it should in respect to your opinion of those correlations, then be skeptical of it. And that's what I'm talking about with the ES and the NQ. Okay, so it's just something I've been noticing. It could be like a new algo that has come into the scene, trying to game a little bit as we get into contracting volatilities and contracting ATRs. You'll kind of see that throughout your trading career. And when you can see it and identify it, it can be a great tool to help with finding good opportunities. So keep running around across the board here. We got our our ATR box on the YM. This one's interesting because a little, stronger morning action. We opened right near the high of the overnight, and now a long red bar. Do they do something like this where that's now our high of the day and it just comes right back, right? Um, Quite possibly they will, and I'm kind of going to leave that up there for now. Take a look at RTY. Yeah, look at this selling in RTY. Again, it's not like it's huge so far, right? But that's after kind of an overnight run and retest of yesterday's high. You can easily just say, hey, look, the high of the day of RTY is in. This is where they would target to the downside. Could be reacting again to bond yields moving slightly higher, getting closer to that sort of tipping point where the market might care a little more about it. And I guess that's kind of the summary for this morning so far. Drag these over so we can reference them easier. So these are my sheets here. Sometimes you see this, which I find interesting. Crude had a false down day yesterday. That means it printed a red candle, but it was actually up compared to the day before. The thing to note about my sheets as well, if you're curious or are using them, I use all the Globex values. I include all the overnight action in my values. I personally think it's important to know and include in all of that. So I've been doing it that way for years. So it's pretty big, doji candle on the 15-minute in ES and NQ. Summertime session as we get into summer contracting kind of price action. You expect things to be choppy. You expect things to be a little more range bound. Without a catalyst to get us into a trend trading kind of situation. Sometimes you have to shift your style and your approach, and you can have a sort of trading plan based off of two different things. You can have a trend trading plan and a range bound trading plan. And again, your time frames obviously are important. You can do that for both, and on different kinds of time frames and stuff. So it doesn't bother me to be in a range bound market at all, but it's a very important part of trying to identify what your expectation is for how much price movement can we see out of things. And sometimes you just get it wrong, right? But other times, we go into these periods where it's like, okay, we've sort of been really expansive and wild and large ATRs and a lot of volatility for months now. It's time for people to relax a little bit, right? Can we not have such huge crazy days all the time, or is this still just the regime we're going to be in for a while? And yeah, I don't know. I think we'll find out today somewhat, but probably more so tomorrow with Fed minutes and that 10-year bond auction. Any questions, observations? Let me get to these posts here. Um, yeah, engaging in the chat. Um, so keeping emotionally stable, I'm talking to large void here. Keeping emotionally stable and engaging in the chat. So part of that would be, I think, even if you're not engaging that much in the chat, if you're here and just paying attention to it a little bit, what I really love is that there's so many different perspectives that it can keep me on my toes a little, you know. I know always like there's somebody like Danny, you know, who's always wanting to be a buyer, long based and optimistic about where things are going and all that. And that's great because I can see if Danny's, you know, talking about a level, or if he's, you know, it's not like you want to base your trades entirely on one person or something, but it's always good to just keep the perspectives, the variety of perspectives in mind, and then try to bounce that around with different time frame ideas of where the market might need to trade in order to sort of feel out whether support or resistance is real in those areas. You know, when it gets to those levels, do buyers step in, or, you know, have the buyers had enough and they're just, as they used to say in the pits, they put their hands in your pockets, you know, and they're not buying anything. So I guess for me, what started to help me with the chat was that when I would post my trades and give people a little sort of heads up of, look, I'm looking to be short, and here's where I'm offered, and this is my stop. To me, that actually helped me personally be a little more accountable to taking my stop, for instance. And then sometimes it would, you know, help me process through the emotional times where, like, if I started doing things I shouldn't do, that I know I shouldn't do, like canceling my stop, adding to losers, continuing to fade a trending market when it's going against you. You know, those are probably like the three biggest sins you can do in trading that will cost you a lot of money. Sometimes just processing that, um, whether out loud or by posting it in the chat, it would help me kind of right my own ship, if you will. Like, because there have been times when I would say right in the chat post, like, damn it, here I go, guys. I'm doing stupid stuff. I know I need to be working this the other way. Like, what am I doing? Let's get it, you know, and it would help me kind of process through some of that. So you'll have to find your way, you know, with large void. You have to kind of find your way as to what the community can do for you personally, and if you can kind of give back into that community, or if you're just more of an observer. There's a lot of people that just like the way that they can be in here. They don't really interact a lot, and that's fine too. If that works for you and that helps you, absolutely, that's the kind of thing you want to be trying to tap into. Let's see here. Yeah, YM. I think, Delph, that YM, um, what we saw yesterday was sort of just a big expansive megaphone wedge shaped price discovery off the early price action. It just kind of kind of went bid, then it sold off pretty hard. The thing that a lot of times happens, YM and RTY both trade pretty thinly. So the price discovery side of things can be great for traders, but also like very, very like thin and dangerous as well. But what I think is curious is when you see something open, near a high of a move like that, and then quickly have these long bars that take that stuff out. So like this is notable price action here in the YM and the RTY. Now, when we've seen this happen, our markets have been rotating so much. It's like there's so much cash always out there that it's like, where's the rotation and what are they going to rotate into today? And so I think that it's curious that we have the weakness in NQ here and in the chips. But if we start to see more selling in YM and RTY, that could just be then our opportunity to see, actually some rotation back into the chips and stuff. I don't know. I typically don't trade YM at all. I've traded it a couple times over my career, but that's about it. But the reason that I like looking at it and watching it is because for me personally, the best trading days I've had have been on totally trending days where it's risk on or risk off across the board. Everything's red or everything's green, everything's sort of correlated. That they're pushing everything one way or the other because of some, mispriced thing with the Fed or some news announcement. Those are the sort of the easiest ways to kind of like, trade with the wind at your back and have trades where you don't have to be absolutely perfect in your entry, but you just know as long as you're going with the trend, you have a really good chance of making money. So when I look at all the different stuff on my screens, oftentimes I'm just scanning to try to have some peripheral sensory intuition about, hey, I've seen this before. Whatever I'm talking about, it's lining up the way I've seen things happen. And so it could be in the bond markets. Like right now, all three of the bond markets are selling off. They're making lows on the day. Let's see what happens. Is this now a perfect short sale opportunity? By my system, it kind of is, except it's still a little early for me to want to get involved here. But the way I trade and the way I look for my entries is based on whether, number one, whether we're above or below the open, RTH open. Number two is my moving averages and whether they're sloped and whether they're sloped up or down. And then that's basically the kind of bias that I look for in what side of the market I think I want to be on. And from there, I'm looking for my entries, which are mostly based on the sloped moving average of the 1 minute here, and then support and resistance levels. So with my sheets, I use those to have support and resistance levels that I don't have to plot on my charts because I like a little cleaner chart. And but it's just a a way to cross-reference things there for me. Philly D, nice 63 3/4. That's good. So you probably would have your stop up in here, 8 or 9 point stop, I would guess, right? And now what we want to look at is go to your higher time frame to try and figure out where don't you want to see price go back into, right? To kind of validate your stop. Because sometimes I'll do that. Honestly, I trade better if I think of things in terms of my stop level first. If my theory here is, oh, I don't want it to violate, say, 72, then I can gauge my entry based on how much risk I want and how much I think I'm sort of chasing or not chasing, and also knowing my failure point. But yeah, here's what we're looking at on a rotation possibly, but also just it had gone too far. Look at how crude is targeting the upside of this ATR range, 70.5 or so. You can look on my sheet real quick and see what kind of values there are. There's a weekly R1 at 71. There's an R3 on the day at 71.30. The prior week's open was 70.5, right? So you can just use some of this stuff to quickly look at and say, how far do I think this will go, before it kind of pulls back a little. You're getting some good volume on this. I don't know if there's news or anything, but having the opportunity to buy back a lot of the oil that we've lost in reserves and, through this whole war shock thing, getting the opportunity to buy a lot of this back in the 67, 68s. I mean, absolutely. They should be absolutely taking advantage of that in my mind. So again, are we going to rotate some today? The chip sector looks really weak again. And on Thursday, when we saw that happen, NQ was, could hardly find a buyer. They were just selling those rallies until, late in the day when we had that short squeeze going into the weekend, which is a pretty, often you'll see that, especially going into a long holiday weekend. Today, if we really start selling, it's could be because they're anticipating these bond auctions, right? So who knows? But right now, I did not have a long signal. I'm still on a short signal, but I'm still waiting. I like to wait. If I usually wait for the first hour, I do better. So I'm just trying to be a lot more patient with everything. Even though I know these can be great opportunities early in the day, I also know that emotionally, when I get it wrong, that's where I can go tilt, or revenge trade or whatever. So, yes, sir. Sorry, let me show you. If you guys don't watch this stuff, here are the bond charts. So the 2, 10, and 30. These are 15-minute charts, again, just to try and keep some consistency in my time frames. And then I also have the tick chart, which I use often for exits and entries as ways to kind of um, not validate, but sort of pick good spots of like, if this is sort of trending down and you're seeing a lot of downticks below, in the negative area, but also like some sustained downticks, 500, 600 minus, that sort of thing. Then sometimes what you can do is use the uptick to actually short into it, right? So like if you're getting stuff like this and then you get an uptick up to a zero reading or even a positive, 100 or 200, that can be a great spot to get your short position on. Or it can be if you see something print in the ticks that are down minus 1,000, or a real extreme reading would be like minus 13, 1,400. If you see that, it's a good place to exit or at least take profit on a leg of your position and then see what happens. Do you get a print that's like minus 1,200 that then quickly snaps back, especially up into the positive range? And that can sometimes signal that things are going to reverse. Um, so I like watching that stuff as well. But, you know, just paying attention to how, when you see something like this, a coordinated selling in bonds, and then if the market sort of pays attention to that, if you can find a correlation with NQ, ES, um, if all of our major markets start looking like they're just going offered and, there's no buyers, then it's just, red flag warning kind of thing, right? Like, don't be trying to pick the bottom here. Let the trade develop, and if you're short, be looking for your spots on where you might see price move to and where it might um, possibly means is because of the math that's involved. So that's why I pay very close attention to all these ATRs. I pay very close attention to pivot levels and stuff because they're they're other than prior days high, prior days low, low, you know obvious things like that and lows. Other like inside, um, in these markets and with, um, yeah, I mean, there's still good rotation on the big board here. There's a lot of stuff that's green, and then there's these chip things that are pretty horrible. They're acting pretty horrible lately, and then you get a good day out of them, and they act great, and then they, But when you look around across the board on some of these chip names, it's like, yeah, they they went pretty much parabolic, and so how much do they need to correct? We're not sure, right? Um, but when you have things that are down 10%, 9%, 7%, 7%, 8%, um, it may not be over. Sorry, I'm kind of squeezing in a little banana here. So one thing for me, also, is I have a filter using the using the it's sort of the combination of the 5-day and the 13-day moving averages on the daily charts, and whether they're again sloping up or downwards, or if they're flat. And on the NQ, what happened is I talked about this. I got my first short only trigger on June 11th. It only lasted for a couple days, and then it went to both sides trading. Then that triggered again on June 25th, and again it only lasted one day, and it's now been on both sides trading. But in ES, that same thing happened, but we actually got 2 days where it triggered for long side only on my filters. And so that was actually on Thursday and on Monday, right? So all that was telling me was that those moving averages started sloping up again. And then for today, the setting is back to both sides. And so those aren't perfect things to watch, but what I do consider is that if you really get into a big trending market like we had in April and May, or like we've had in crude on the short side, I mean, my crude filter has been short side only since, I am going to tell you, since May 22nd. There were 4 days from June 4th to June 9th where it went to both sides trading. And then starting June 10th, it went back to short side only, and it's been short side only ever since. And so the reason I bring that up is because sometimes, I'm talking to myself on a lot of these kinds of things when I say them, and I'm hoping that you might benefit as well. As like sometimes when you get these kinds of signals firing or filters firing, if you will, sometimes they can really mean something and actually save you a lot of money by keeping you aligned with the structure, right? And where price wants to go. And so with NQ, I think we got to be careful here. But look what's happening. It's printing right now, testing the bottom of that ATR box. Now, ES, I'm just noticing I never moved it. So here's the ES chart. So this was centered on the Globex session close. But if we act like the high is in, drag this down like this. The 5-day ATR on the ES is like 92 bucks. So from this overnight high, 92 bucks gets us to 75.09. In a straight line drop, you know, it's difficult if that happens in a straight line drop, because you start to feel like, oh, the bottom's really falling out on this thing now. And what if instead of going into a contracting volatility, what if we had our contraction and volatility, and what if now we go back into an expansive kind of thing, and we put in a day in the ES that's, you know, 180 points to the downside, like a 2x volatility of where we're at right now. Like, that would be pretty intense selling, I think, again, for what the expectation is of what we're coming into tomorrow, and even just tonight in terms of the crude inventories and stuff. But then tomorrow in terms of bond auction and FOMC minutes. But you know, the way these things can go, like what did we have in NQ? We had a couple weeks ago, it was sort of like 4 out of 6 trading days or something like that, where we traded a range of like over 1,200 points in the NQ. And this is in June. I mean, there's wild stuff happening here that we haven't seen in a while, you know, in quite some time. I mean, I've never seen, I think personally in my trading, I've never seen this kind of summer trading before. So it's great. It's absolutely awesome as a trader if you can embrace that volatility, and you can make a lot of money, but you can also lose a lot too. So be careful, keep your stops in, don't ever cancel them, just take your loss and move on to the next opportunity. Okay, I'm gonna I need to get rid of this banana peel. I'll be right back. Oh no, Manny. So what, Manny? When you say you missed it, um, you missed the entry, so you missed the whole move, or you you made the 50 points, but you just missed the exit by a few ticks, and then now you're covering like for not quite as good of a profit. Just curious how that turned out for you there. And and for me, so here now we're finally through our first hour of trade. It's been a pretty nice orderly sell off, right? Like every rally gets sold off. The pullbacks seem to be, very, very measured, right? Each one of these pullbacks has a similar distance to it. And then you can kind of see even the downward moves, you get, that measurement is pretty similar, right? So right now, that doesn't necessarily change, although after the first hour of trade, oftentimes you then get a counter trend rally, right? So, that would be the way that these things have moved and already fulfilled their ATRs on the day, except ES hasn't, right? That's kind of curious. The YM hasn't, right? But that has been a little bit of my theory with some tailwinds is that the broader market, we should see some tailwinds out of the crude trade. Um, so that could be some of the disconnect where, you don't get quite as much selling in ES and YM as you might otherwise, on a day that looks, a little gnarly here for NQ. But let's watch and see. Can we put in a little counter trend rally? We need to get back above these 48s, 49s. And a counter trend rally should be like an ABC correction, right? As a minimum. So you should see if this is the low, it goes up like this, it's already come back some, and now it should come up back up like this and at least test these 55s. And more ideally, get up into this sort of boxy area right here. If you're wondering, like, what I do with this indicator is this is a coloring indicator for my chart where the overnight is here, all back here. This is our RTH open. And then I have this shaded in sort of this greenish color for the first hour. And what that does is it tries to visually keep me waiting, because I want to wait for the first hour to complete. And then I start looking at where do I want to take my first trade for the day. Nice, Manny. Awesome. Nice. So yeah, let me I'm gonna start turning on, see if I can get myself ready here. Oh, sorry to hear that, Niels. Yeah, that's something that happens to me too often because I am trading such a short time frame. Sometimes I get shaken out because I'm trying to, read too much into the 1 minute chart when ideally you should probably be using right that next time frame up. So I mean, it could be like a 5 minute for me, but I should more than often I should be using the 15 minute as my stopping point. But sometimes I look at the 15 minute with different ideas of where your stop level could be. And then also how developed the 15-minute candle actually is. Um, in other words, like right now, we have 7.5 minutes left before this candle completes. So, what I like to do is kind of theorize, you know, the high of this current bar as 47 3/4. Look at the low of that long bar, it's 47.5, right? So that's a really important level, and it, you know, sort of sounds too obvious saying it, right? But that is an important level to watch. It could be an important level throughout the rest of the trading session. Um, when you look at my sheet here, we have 5 day moving average coming in here at 37.5. Yesterday's low, 38.25. Our S1 level at 56. And then something else I like to look at, the slope, the projected slope of the 5 day actually would come in tomorrow at like 77.5. Now that all changes, of course, if we have a big sell-off day that just keeps following through to the downside and prints a big red candle, and that'll change. But um, sometimes it gives you an idea of if we do get a rally going again, what could happen here. We could easily go kind of right back up towards and test the open and just have a day where it's like we fulfilled our ATR. Then they started to switch on their buy programs, goes the other way, and there you go, right? So I'm watching this low that we just put in on the NQ, 240 3/4. Okay, the low over here was 260. Let's see, 259 3/4. Okay. What I want to see is that 259 level hold and have it start moving back up through some of the buy stops here. To look for that counter trend rally, either to get long or to let the counter trend rally play out and then fail and get back into a short position at that point. To be clear, I've been flat all day, so sort of missed all of this, but that's okay. RTY breaking again. Advanced declines continuing to deteriorate some, trading minus 180 now. Mag 7 doesn't look bad, but so there's that rotation that's happening where coming out of the chips, but Apple, Amazon, Google, Meta, Microsoft, even Tesla, it's not that bad, right? So far, right? Nvidia, definite weakness for now. It was more in the overnight, not only in the post market, but then the pre market. Um, so we're kind of through yesterday's low there on the ES now, and the question is, will the selling accelerate or not? Just reading through and looking at the bond market. You know, we did get through that 4.5 level on 10-year yield. And again, the 30 years above 5.02. So watching the bond markets for the leadership here, because in all three markets they made a low there and now they've gone bid slightly. So that can indicate that maybe it's overdone for now and maybe we'll start to turn. Again, maybe not. If bonds continue to sell off and yields continue to go higher, then the market at some point could take notice of that. But again, the way the pricing has worked on some of this stuff, it's almost like a perfect gift that the crude market came way down the way it did, because it gives the Fed a little room to breathe and it gives the rest of us a little room to breathe. I mean, the consumers and everybody else, you know, um, it's a big factor in terms of your daily spending and stuff. So, you know, I don't expect this to get too out of control here to the downside unless we get into a real hiking cycle where they're late to the party once again, because they always seem to be late. So that's the big concern that I have from a bearish perspective, would be if the Fed does start to hike and we're going into a recession at the same time, right? Because that's the way it tends to happen sometimes, is like they're late, they act right at the wrong time. Then you get the exaggeration and downside move, the capitulation, and then we can all start partying again and getting long again. Easy. Are you still short? Yeah, you're still short from 99. Awesome. Gotta love it. I like trading short. It's not like because I'm always betting against the world or whatever. I just like the quicker moves. I like the panicky action. I learned how to trade in 2008, so I kind of have this affinity to being short. And a lot of times that's to my detriment. So a lot of times I really have to force myself um, to ignore my opinions and biases and, you know, get long. So yeah, I was gonna try and get something to trade here. So let me try and get my stuff pulled up. Um, So again, watch the 47s. See if they can target those stops above that level. And if so, can we get a retest of the longer time frame moving average? So right now it's all the way up at 71 on ES, or maybe 68. It sort of corresponds here between my 15-minute, so it's a 13 period look back. But then when I do it on the 1 minute, I use, I kind of divide it backwards or however to get to a similar, right? So this one is 195 period look back on a 1 minute chart. That sort of corresponds, right? But it's not always perfect because of the fact that this one's doing more calculations based on each individual 1 minute bar. All right. All right, so we have a little reversal signal trying to develop here. What I want to see is price get back up through and into this area. We have buy stops above to target, and once if price starts to print a little higher here, then we'll see this 1 minute moving average start to actually turn and start to slope back towards the upside. And then what I want to do is try to buy a pullback somewhere, either to a support level or to the moving average. So watching this for a potential long trade setup. You can also still just think that the downtrend will resume, and you can try selling them right here with a stop above the 50 or 47s, or, but again, you got about 7 minutes before this next 15-minute candle forms, or completes rather. And oftentimes what happens is that once the sellers are done and the sell programs have completed and they start buying them again, the buy programs know where those targets are and where those buy stops are, right? So a lot of times your 15-minute candle can give you that precision of a quick risk reward calculation on how you can, where you want to see price trade through, right? So like, even if to me, I don't want to buy it right here because you're fine. It might be fine to buy it right here with a stop below or something, but I'm just now getting sort of the confirmation of a reversal type trade that I want. So the safer thing is to now be looking for a retest of this low. Ideally where they actually flush back down through anyone who's put in their sell stops at 36. And if you can get them back around the 32, 33s, you have a really nice tight stop, right? You may not get that chance also. So when I do a quick calculation, it's kind of more along the lines of, if I buy them now to a pullback of the moving average, say to 40, okay, and I want to use a 4-point stop, for instance, it's likely they'll hit that stop. But if they don't, I'm quickly just looking at the fact that from 40 to 47, that gives me enough room, right? That if they just run a few of those stops, I can leg out of a couple units. And then if it really goes, you hold your runner back up into the longer time frame moving average, or possibly the open, or possibly they just absolutely reverse the whole thing and rip it all the way back to the upside. So yeah, just depending on your style and what kind of entries you like to use. The point that I make for myself, and if you're kind of at all similar in terms of how you trade and your entries and stuff, is once this thing starts to rotate like this, once it starts to turn and reverse, I don't really want to be shorting again unless I see price start to drop again. I mean, you can, right? But the way that these algos and program buying and selling things, the programs work, is they take liquidity, right? So once it starts going bid, and you can kind of read this sometimes in the order flow and in your dome and everything. But once it starts going bid, they keep it bid because they're buying into the buy stops. They want to keep it bid and keep it firm so that ultimately they trigger the buy stops so they can then start selling into them, right? That's the nature of how the algos work on both sides of the equation. And so, the 1 minute, I find that the 1 minute chart and the slope of that moving average, even if I'm not doing anything at all, helps keep me out of trouble a lot of times. Um, because you could be shorting right in here thinking that, oh yeah, no problem, this thing's going to drop. The NQ is going through the 29,000 level and the ES is going through the 7,500 level, and that all could be well and good, but it may actually need to go all the way up to the 65s again before it rejects and makes another big move to the downside, right? So if you're shorting here, um, it's a matter of evaluating that risk reward and deciding, hey, is it worth it or not? And yes, it might very well be, as long as you're willing to take your tight stop and take it quickly, because if this does violate the 48s, they could have a 1 minute bar that prints 63, and you don't want to be caught in that if you get too opinionated about the fact that, oh, we had this nice selling move, and it's going to be a big sell day and we should just be shorting every rally. That may be the case, but the way the structure lays out is, like, for me, I want to see, if I want to be short here, I either want to be short up here or pick a level that I think is meaningful, like a 47. Let's say they trade 47, but it's a false breakout of 47, and then it reverses and starts going lower. Then I would look to short a little pop after that, right? So I want to see it come back down here, start to roll over again, short it again, have your stop above. Okay. I personally, guys, I think that we've probably seen the bulk of the move for the day. So I think this will likely be a very good long entry here. If you can get a little liquidity run back into this 34, 33 level, you may not get it. You may need to buy them right here around these 40s. But here's the part that looks good to me is that everyone now is getting their buy stops in up above that 48, right? So um, it'll be very easy for the algos to run this thing back up through those levels, in my opinion. Um, So when I look at the NQ, right, a lot of times if you're going to form a an inverse head and shoulders here, little mini head and shoulders bottom on the 1 minute, this is what I like is I like that the right side shoulder would be higher than the left side shoulders. That's a formation that tends to play out nicely to the upside. If you get a right side shoulder that's lower here, then it tends to indicate that there could be more downside pressure to it. Again, we won't know until after it completes, but this 330 level, let's see what we've got over here. R2 is 319 and a quarter. So that would be a quick look at something that you want to see if they can overtake that or not. But so far it's failed, right? But what I kind of continue to look at here is just coming off the holiday, going into some summer trade, having some stuff later this week that I think is more important than what we've seen today. I mean, and then, yeah, if you start to see some of these chip names actually reverse, you can do like a little look at your tickers across some of those. Like, I haven't looked at some of these today at all. So, like, let's look at AMD. You know, could there be a big air pocket under here below this 500 level? Absolutely, there could be. Are they going to just sweep that in one day today? Like maybe there's a big gap down this morning. So do they instead try to fill that gap some? Look at AMD, look at Intel. Intel did break that kind of similar level there, but is still kind of right in the middle of this big range. But yeah, minus down 10% again on the day right now. Pretty ugly stuff. And yeah, pretty ugly when you consider, is it trading down like this because of bond markets? Look at SanDisk. SanDisk looking uglier, right? But it had also gotten an even more parabolic to the upside. So I don't know, but you know, when you see this kind of stuff, you kind of feel bad for people that were buying this stuff at 2,200. You know, how often do they lure in the retailers to buy a bunch of this crap that then they just unload it on? What's WDC? So WDC, I don't even know what it is. But it's trying to go a little bit bid here. Western Digital. Okay. So see if some of these start putting in a little bit of a pattern where it looks like they're trying to build it off of a low. Nvidia, so far it hasn't even broken the pre-market low and is now acting a little bit bid. Microsoft is somewhat bid. Apple's trying to recover, is basically at sort of the midway point of its morning sell-off. So if they start to rotate a little here, they've sold the YM and the RTY enough that now they can probably put some of that money back into the NQ and ES, right? And I don't know if you noticed this on the crude chart, but like I talked about, we fulfilled our ATR, and then look at the sell program that came in off of that, right? This is the 1 minute chart on crude. And so as soon as we fulfilled our ATR up there to 70 and a half, boom, they just completely knocked it back, right? So does crude have enough oomph without any news? And when we're in waiting mode, are the shorts actually that worried about it to where we might get an expansive move up through, say, the 71, 72s today? Or do we see crude settle back down in here because they're in waiting mode, right? I need to see what those numbers look like after the close today, and then, um, yeah, and then into the inventories tomorrow. So we got back up through that 319 level on the NQ. We're just barely there. Now let's see if they trigger and actually run these stops to the upside. Or does this look like a little false breakout and then they come back down through those 319s and start sweeping them back to the lows again? So you see this pattern on the NQ 15-minute. This looks good to me, right? We got our ATR fulfillment. Remember what I said about getting through all of these lows over here, right? Because there's so many of them, it tends to be a support level that really should hold. Like, is it that likely that it's not going to bounce off of that somewhere? That doesn't mean that we don't get the bounce here and then it just boom does a measured move, collapse through all of this stuff. However, when you have something lay out like this, and then you see a pattern like this on the 15-minute chart, it's a really nice looking 2-bar reversal, if you want to call it that. I know the green bar is an inside bar, but that almost makes it sort of more of a buildup, right? And then here's the head and shoulders when you're looking at it on a 15-minute chart. You could call this sort of the head, and this is the left shoulder, and here's the right shoulder. And I like the way that tail is higher than this tail, right? So to me, what that looks like is that you get expansion back up into the, this is maybe like a fair value gap candle right in this zone right here. But definitely if they want to take it all the way back up into there, and the more the algos can keep it bid, the more they can start running stops and gaining upside momentum, the more buyers they draw in that are on the sidelines, the more the shorts have to cover. And they just, it's just a cycle where they go boom, sell program, boom, buy program, and who knows where we close on the day, but we still have 3 minutes left till the close of this candle. So you want to watch very closely on how do they close this candle, because sometimes what you'll see, especially as you go into lower volatility kind of trades is you'll see the programs increase their volume right near the close of the candle and at the beginning of the opening of the next candle. So you can kind of watch this closely as we get close to it. Do they come back down in here and print a doji? Do they just completely sweep it back down and catch everybody? Or do they print it, 50, 60 points higher because they know they can just now catch the shorts, and you know what I mean? So you want to see what this looks like here, and as it corresponds to like the YM is now still showing weakness, but that could be a good thing in terms of the rotation. Where they're moving their money around, right? Amazon and Google go to new lows, weakness in Meta, but you got some bidding coming in Nvidia, right? So you could have they've sold the chips, and you could have them start buying back their shorts if they were short, or just going back into that stuff. It's amazing how much rotation there is in the markets these days. I don't know, maybe there always was, and I didn't notice it as much in the old days. But it seems like it's been a while, or it seems like it's fewer and farther between to see these days where it's all risk on or all risk off. It seems like we used to get those more than we have been in the recent year. Let me try this again and see. Okay. The continuation pattern, maybe we just put in our ABC could not get up through those stops at the 47s. It's sold off a little, gave us right. Or we print that bar green. It's giving another be sort of a last chance for the shorts to get out, right? And then they start going bid again, and then the shorts are forced to cover higher if that's what happens, right? But like what I was talking about before, you could have tried those 40s. You had 5 or 6 points. But what I was saying with the ES is I would have liked it better here at 32 or 33, because then you've got your stop below those lows. It's like there's some kind of news. Some news on the Strait of Hormuz. News on Hormuz. So to me, this is, sets up pretty nicely in either direction, to be very honest with everyone, because um, if there's news or something, this can go, we can sell off a lot harder, right? Um, and so you could easily, now that we've broken again, you could easily say this was our counter trend. Now it's rolling back over. It's time to be offered again at 40. You can use a 5-point stop. You can use an 8-point stop, or you can see if it can come all the way back up here again and actually try that 47 level again, because sometimes you'll see this, like I was saying earlier this morning, sometimes you'll see in the recent days, you've seen ES actually try to sort of get that extra manipulation out of the stop run. So you'll see like NQ start to go offered again. ES will come up here, run the stops, because it's like everyone's watching NQ, right? To see if NQ is going to drop. So sometimes you can see NQ drop, and if ES doesn't drop with it, there's a good chance they're going to gun for these stops, and sometimes you can pick that as your entry point for what you expect to be a false breakout, right? If you can get from 38 up to 47 in a big quick print, boom, and they've taken all that liquidity, then it can collapse. But if you need to or want to layer into it, you can also do that. You want to sell a 40, a 44, and a 48 or something, right? But if you're going to do it like that, then you probably need to have your stop at, you know, it's wherever your time. But Tesla on its low now, Amazon looking pretty weak, even though it's basically flat on the day. But advanced declines still haven't done much of anything. They're minus 90. They got down to like a minus 200 print, but when I was talking about this yesterday in my room, is I use the advanced declines as a good gauge of how mispriced something might be in the market. So if it's sort of in this flat area between plus and minus 400 or so, that's generally indicates a pretty choppy range bound trade. Doesn't have to be, because like we saw, we started out positive and went negative, so that can indicate that it's going to be a trending day. But then when things start to stabilize, you could end up still with a pretty flattish day on the advanced declines, and not that much trending price action. It could be that we've seen the trending price action for the day, as far as especially as far as downside. We do have crude breaking out here, or trying to break out above the high. So it could be this news about Hormuz that could start triggering a whole nother level of volatility again. So you want to just honor the stops, guys, wherever they are, whatever side you're trying to be on here. If you think that we're going to go back to 7,500, you can do some quick math and short the 40s and have a 5 or 10 point stop for a 40-point reward, right? That's an easy one. But you know, you just have to honor the stop if it doesn't work. Interesting, pretty heavily red sector in the producer manufacturing index or sector. AMAT down 10%, CAT down almost 6%, GEV down 10.5%, LCRX down 8.5%. So this could end up being a little more like the Thursday action we had, but large void, is that something we look up on the trading view platform? Can I find it there? Okay, thank you, sir, or ma'am, or appreciate that. Check that out for sure. So it's feeling a little heavy here, right? Tried up here, that ends up being possibly a good short reversal entry, as we were discussing after a little counter trend rally. The worry is that the counter trend rally wasn't quite as big as I was looking for. So you know, if this is a true reversal setup and we've put in our lows on the day, then this still sets up nicely for the buy stops to be triggered if we can get it going here. You know, they can get it going. Just a matter of will they. And if there's any news that keeps knocking this thing down or not. But this is where you can start zooming in sometimes when you get into the slow periods. Number one, we all talk about thin to win and don't short a dull market, right? So from a technical perspective, we talk about support and resistance. Well, these things work on the real micro time frames, okay? So this thing just held this level. You want to see the 1 minute bar get up through this level here at 40 and a half. Okay. And then if you can get it, I mean, you can use a buy stop entry if you want, right? But what I want to see is this thing just tick slightly above here and then pull back quickly to, you can use the 40 and a half as the perfect spot, or this is a pretty perfect spot, right? This little box right here, if you ignore these highs. So if you tick right up through this 38 and a half, and then you get a quick move, you know, pull back. So boom, here's our indicator. Now you can buy at 38 and a half or 38 and a quarter with a tight stop below these levels. And you may get absolutely just quickly smoked on it. But oftentimes this support resistance on a very mini time frame can work really well. Right? So you don't want to see it come back down through, this bar for sure. This is a little doji right here. I mean, this can be explosive, right? So, I'm simultaneously glancing over at my Mag 7s because we don't have Nvidia's looking fine, right? Like, I mean, it's weak compared to where it was yesterday, but it's currently trading like it wants to go up and fill the gap. Like it's holding this 92 and a half level, and it looks like it has eyes for highs on the day trade session, the regular trade session, right? So you got your little mini indicator here. It came back in. Now can it hold and print another bar? There's stops here at 41, 45, 48, 55, so once the algos get a hold of that positioning, they'll go bid here if they do, right? And they will just start squeezing this thing to where you won't get a chance to get back in. That was your chance, right? And it gave you just a split second. It was like 30 seconds of price action to get either into that long or to get out of your short. Now I really like it, right? You can try it again. If you didn't get in, you can try it again. But now you've got this longer green expansion bar that should hold. So your stop can be right below that. If it gets taken out, it gets taken out. If you want to give it more room, you can put it below the low of the day and stuff. But if it ends up being that this is your, downward bearish flag or, sort of thing like that, then the sell reaction could be a measured move. So each of these moves was like 25 or 28 points. The sell reaction could be from 40 down to like 12. But quick glance over to the crude chart, it rolled over and rejected that 70 and a half level again. So maybe the news is sort of a catch where it's not quite going to react the way everyone thought it was going to react. I'm looking now back over at Nvidia, trying to get back up through to and through the 93 and a half zone. This trade right here gives you a really good risk reward. So whether you get stopped out or not, on the upside, you've got, a quick 20 points possibly for a 4-point stop, right? That's the way I'm looking at this. And when I see it tick up like this, just and take out this little high right here, to me, that's a quick little indication that, hey, the buyers came in. They have some to buy, right? They bought them in here and pushed them up. they pause it a little bit. This could be like your perfect spot, right? And then it starts going. Look at RTY has reclaimed the 3000 level. It's printed 3 green candles in a row on the 15-minute chart. YM, a little bit of a, not a perfect 2-bar reversal, but if it holds the low of this candle, then it probably targets back up towards the middle of this range. Maybe not. Again, Caterpillar and some of those being really weak. And watching the bond market, they kind of stabilized in their range, but now might be rolling over again to the sell side. So watch that and see. Let's try this again. All right. Now, will this be a little false breakdown? Can they hold this 270 level in the Qs or not, or in the NQ? That's not the follow through I wanted to see, right? So that doesn't mean it won't still work to the upside. They might have had to trap those last few people here before it gets going. But watching NVIDIA closely, eyes for highs on the regular trading session, trading 93.43. Looks like it wants to close the gap. See if it can trade back up through 95. Now I'm a little bit outside of my window of when I want to take a trade, but let me see if I can get my platform up, and I'll see if I can get a good long entry here. All right. Drag this over. And I'm actually kind of running towards the end of the time slot here, but I'll see if I can put something on here and maybe follow it through for another 20 minutes or so, and then we can wrap it up for the day. So I'm going to try a retest of this 34 level. On a 4-point stop. Let me just double check what my sheets have. $34. I really want to see it back above that prior day's low, right? So this could be a little bit of a silly trade, but I do like the way NVIDIA is trying to react, and I do like the way the advanced declines just don't, it doesn't feel like there's the follow through that we're going to get, just partly because of the summer session here. Sellers coming in though. Some divergence though, and advanced decline. So I'm going to try it right on the low if I can. No, I think I missed it. That was maybe the chance. Try 33 and a quarter. I guess my level 2 isn't. Let's see if I can. There's a stop. Starting to see a little downturn again in the advanced declines. So this could be like me buying the top tick where they then start coming in with the sell program. But I'll kind of stay with it, see what happens. We haven't seen NVIDIA start to back off too much. It did a little bit. It printed sort of a perfect match of that RTH high, so it could be kind of a false thing here going to the upside, but I'll take the trade either way. All right, so I got 3 long at 38 and a quarter. I'm just looking for +3 and +6 on the first two. Remember the level I was talking about in NQ? It's the 319 level. They could sell that again pretty hard and reject it pretty hard here, but now they're up and through it. So let's see if there's any follow through. All right, I got mine back. So I moved my stop. Uh-oh, what happened? Oh, I know, because it was I put those in before my position. So I got 2 of them back. I got my +3 and my +6. Okay, and now I'm just gonna have my stop down here. I mean, I could leave it down here at below the low of this first bar, but I really want to see this bar now close above and really rip through the 47s, right? Now, I don't know what's going on. Is there news or not? It doesn't matter. But we do see that NVIDIA got through its RTH high. You know, and sometimes that's all it takes is identification of some little mini divergence to where, you know, you're just trying to identify, does the market care about this or not? And if it does, they flip, you know, it's easy for the algos to flip the buy programs on. They've sold enough this morning, right? Like, how much more do they want to sell before some of this stuff tomorrow and next? And you know, I mean, maybe they do. Maybe they still have to take these things down a lot. Again, if you can't get over the 47s, you could have a false breakout here, the 47s, to where it ends up being a really good entry to the short side, and where they sweep it and then take it all the way down to 7,500. It's possible, you know. We can have thin market sell-offs as much as we can have thin market rallies, right? But again, I'm watching NVIDIA to see if it can close this gap. You know, I want to see it trade above 195, and if it can, they can really start coming in here on the buy side because of the rotations that happen all the time in these markets, right? So my system is to see if I can get 12 points on the runner. If it closes above, say, 50 and a quarter, then I'll move my stop to just like 46.25 to lock in 8 points on that runner. And then I'll just see if we can get one that moves all the way back up to the longer moving average that I have up there, or possibly the open, or possibly we go all the way up and through the highs of the day. But we are seeing crude right now test this 70.5 level again. So we could see a very sharp and hard rejection of this 47 level. And I want to watch, if NQ can get back up into this previous range between 420 and 500. And what happens if it can get up in there? How does price react? But from my own trading plans perspective here, again, I'm now looking at this saying, from the daily perspective, I'm sort of short biased. From the 15-minute perspective, I'm sort of short biased. But from my 1-minute perspective, we have this now nice potential double bottom with a higher low, a reversal signal. The 1 minute has curled to the upside, and we've got NVIDIA trying to close the gap, and watch and see if some of these other chip stocks make an effort at that gap close. Might not. We have pretty good move here trying to happen in crude. So if crude gets legs and starts looking like 71s, 72s are going to trade, then there's something going on, and maybe we get back into this regime where crude rallies and the market sells off, we'll see. But if I'm looking at now the 1 minute chart here, here's the controlling bar that I got in on, right? Here's the low of this next controlling bar, which, look at where those highs and lows come in, is right at that little mini support resistance level at 41, right? So if it comes back down and can't even test the 41s and now starts running these stops again to the upside, that's a show of strength. If it comes back down and just barely tests that 41.5 level and then goes, that's also a show of strength, right? Sometimes you get these kinds of pushes, and then if it's a false breakdown, you're in trouble, because they've now pulled a lot of longs into the market, people with stops, right? And remember, I'm looking for a close above 50.25 to then move my stop again. And we haven't gotten that. And the part of the reason I look for that stuff is because the ES sometimes will trade very precisely around the 50s, the 50, 25, and 75 level, and of course the big roundies. But it's sort of like what, it's almost like now that it's trading at 75.50, you know, like those 25-point increments are almost like the new spread. You know, it's like this thing can trade in 10, 20 points in a few seconds, right? So that's almost like even the noise, right? But yeah, so I want to see now this become a measured move. You see what the pullbacks looked like on the downside. They were, that was 43 to 55, that was 8 points, you know, pretty similar. 47, 8 or 9 points. This one we only got a pullback from 49 and a quarter to 43 and a quarter, so only 6 points. The move up was from 31 to 49. Pretty nice little move, right? 18 points with a 6-point pullback. So now can we put in a quick measured move on this little buy program? It would be from 43, right, to 61, which gets us right to the bottom of that, right? And then where are the stops? Stops are typically then going to be 63, 69, 72, right? So if this is wave one with a very shallow wave two, sometimes your wave three could be 2x or 3x of that wave one. So if it's 18 points here, you could have, instead of an 18-point measured move, you could have a 36-point move from 43 to 79, and then look where that trades us, right back to the open. And it's a it's like a no big deal day, right? It's like, oh, we're just back to the open. Nothing happened today. So those are kind of some of the ways that I look at the setups and try to anticipate, where and when to try and get in. I was a little late, or I was a little too perfect on trying to capture a perfect retest of the low and the double bottom. But so far, either way, it's a profitable trade. I've locked in, $550 and hopefully a lot more, right? Like if we go back to the open, can just put this in here at, what if we go back and target the high of the day, right? Then you could have almost a $3,000 trade on that out of a 3 lot. Seems a little unlikely, but you never know. So I'm gonna, I think I'm gonna go ahead and call it there on the live cast. Let's see, it sounds like on Friday we're gonna do a giveaway for a Pitbull Traders 50K account. So make sure you tune into that and see if you can get set up with that. And once again, I've helped a few of you guys. I'm always glad to help with anything you want, but also just with like setup. So if you're trying to do a Pitbull account, if you've never done one before and stuff like that, it's not terribly hard, but there are some sort of nuances to just the software and how it, when you go onto the website, it's a little bit not exactly correlating. Like it just kind of takes a little figuring out how it all works. So it's easy for me to help anyone who needs. And, I can share my screen and walk you through it and whatever that kind of stuff happens, whatever you need there. And obviously with any other kind of trading and stuff too, um, I'll put my links in for my room and for my website. And hopefully I'm helping some of you guys just hear some other ideas and perspectives and how you can formulate some trade ideas, and even on the fly, because that's kind of what I like to do is read and do this stuff in real time and on the fly. It's just one of the things I enjoy about it. So we'll leave it at that. I'll leave my screens up for a little bit, even though I'm going to get off the live cast, and then, maybe get some climbing in this afternoon. So thanks a lot, guys. Appreciate it.